Hello, everybody, and welcome to the Driven to Succeed Real Estate Podcast. I am your host, Brett LaCoy, and we have a very special guest with us today, the king of creative financing and contract for deed, Jesse Mills.
Thanks, brother.
Hey, how are you doing, Jesse?
I'm doing awesome, man. I'm doing awesome. Thank you for having me, and I appreciate the title, man.
Yeah, absolutely. Well, you do a lot of this stuff.
I do.
Right?
Yeah.
So, first of all, what I'd like to do is I'd like to get to know you a little bit more. What's your background? What are some of your hobbies? What do you like to do? So take it away, man. What do you like to do?
Man. As cliche as it sounds, I like to have fun. I don't like to sit around. I'm not a homebody.
Right on.
I got to be on the move. I got to be doing stuff. I love to travel. I've been blessed to have been to, I think, 38 countries.
Oh, wow.
I was keeping up with my age, one country per year of my age.
Sure.
But now I got to catch up a little bit.
You got to catch up a little bit.
I got to catch up, yeah.
So is that primarily like over in Europe or?
I've been in Europe a couple times, Australia. I studied abroad in Australia.
Oh, that
New
sounds
Zealand
amazing.
and Fiji.
Okay.
And Tahiti and the Cook Islands in college.
Did you get to go to the Lord of the Rings place in New Zealand?
I didn't. Sadly, this was, I think, before it was even out, so I didn't
Before
know what
it
it
was
was
even
yet.
Okay.
Right?
Okay.
Yeah, to date myself here, right? This is like 1999, 2000.
Right on. Right on.
So,
okay.
yeah, this was when the millennium was happening. So
sure.
I was in a lagoon at midnight in the Cook Islands, and they were wondering what was going to happen with the world.
Right.
Right, because the whole Y2K crap is nuts.
Right.
We're like, is things going to keep going here once we hit 2000? This is weird and goofy, but
Oh my goodness.
yeah. So I like to travel. I love skiing, hiking, golfing, which I don't do enough of. But,
Right.
And then just seeing new places and meeting new people.
Yeah,
time.
absolutely. Well, I mean, right now, I know that you're busy right now, and it's hard to get away and do some of those things.
It is. Well, I made a decision a while ago to try to make my business the way I want my life to be, and
Okay.
not make my life around my business, right? And try to really bring them together.
Sure.
Yeah.
Okay. So let's talk about your business a little bit. So you do a lot of creative financing, contract for deed type stuff. Can you give us a little bit of an overview of what it is you do and how you make it all work?
Yeah. So maybe it's helpful to kind of know my background a little bit and how I got into it, right?
Yeah, absolutely. Please.
Like, how do people get into this? And it's most agents, most lenders do kind of cookie cutter stuff.
Right.
And there's little special niches and programs and this and that here and there. But it's kind of a lot of the same stuff. And I was a mortgage broker for 15 plus years.
Okay.
So I was a lender.
So you know about mortgages.
I know all about mortgages. Yes, I've done the big bank, the national companies, the local credit unions. I've done kind of a bunch, right?
Okay.
So that was how I kind of got into the business, really in my 20s. A buddy of mine, well, I didn't even know what a mortgage was. I was like right out of college, and he's like, yeah, I just call like 50 to 100 people a day, and I'm making like 60, 70,000 a year, and we're like 21, 22, 23, and I'm like, that's pretty cool. I can do that, I think.
Right.
So
right.
yeah, what is a mortgage exactly, right?
Mm-hmm.
So I spent 15 years or so in the business doing that. Went through the crash, went through the financial crisis, and got a little beat up in that.
Yeah.
Not proud to say, but I'm happy to. It's part of history. And
Right.
I say, hey, billion-dollar banks went under, right? What's going to happen to the little guy that's, kind of waiting on every check each month to keep a living? So I got a little beat up, had some bruises through that event, and at that point I was like, okay, number one, I don't want to go through this ever again. Okay. Number two, I was helping other people get like investment properties and seeing people starting to invest, and started reading Rich Dad Poor Dad, and doing all the YouTube and podcasts about investing in real estate. And I'm like, well, how can I get into this? Because I got a little beat up in the crisis. Credit wasn't so good, right?
Sure.
And so I said, okay, what's out there? So I started finding things on like lease to own and rent to own and seller financing. And
Okay.
I gravitated to that because I'm like, well, I'm a loan officer, right? I get it.
Right.
Like
right.
a lot of this is underwriting the people and the situation, and there's a yes and a no and something in the middle. And so the more I learned about it, I'm like, okay, this is cool because number one, I can help more of my clients, right? As a loan officer, if I can't get them a loan, I don't get paid.
Right.
They don't get the house. They're not happy. I'm not happy. No one's happy.
Right.
But if I have another option for them where they can still get the house, and if I can still get compensated, that's fantastic.
Sure.
And so now I can help more people and I can make more money, and it's a win-win.
It's a win-win.
Yeah. So I started really just diving into that. Spent some money on education and online courses and training. Did some coaching. I'm one of those people, that if I can see a shortcut, I'm going to try to take it.
Right.
I don't mind investing in a shortcut, in a mentor, in a coach, in a course, and it's tough, right? Because a lot of people out there are like, well, anything on the internet's a scam and it's a ripoff, and
Right.
how do you know it works and how do you know it's real? And well, you sometimes you don't know if it is. But I also know for the $1,000 I spent on this online course, if I could do one real estate deal with it and learn how to help more clients, that it's worth $1,000 all day, every day.
All day, every day.
Yeah.
All
And
day,
actually,
every day.
my first deal I ever did, I made $8,000.
Oh,
On a deal I would have made zero because they couldn't qualify to get financing.
right.
So it was a couple actually who went through a divorce, which kind of led to them doing a bankruptcy through the divorce situation, and then they're also self-employed.
Oh, so you just hit on the 3 big ones right there.
Yeah, all in one.
All in one.
But they could still afford a nice, normal monthly payment every month. They had some money saved away, and they're going to go pay someone to have a roof over their head somewhere. And so
Right.
for them, a lot of the time, it's a timing situation, right? And so I said,
Right.
hey, is there something we can fix, and when can that situation get fixed?
Right, and I think that's really important, especially right now in today's market with how hard it is to just get something under contract,
Yeah, yep.
right? If you just went through a divorce, your credit shot, BK, anything like that, it's like, well, I don't even know what's going to be around in the next, 2-4 years.
Yeah.
So this is something where you can come in and help those folks out.
We can, yeah. So essentially, how this now works is I spent a number of years, and the way I started is kind of the way a lot of the other gurus out there teach it, and coaches teach us, right? Especially back 2010 to 2015, really, right? Market was down, prices were down, right? People were kind of just getting back on their feet with everything, and so there were a lot of sellers who couldn't sell.
Sure.
They're having a hard time selling their property, right? It wasn't 2 days on the market like it has been, recently,
Right.
Or a week or 2 weeks now on the market, right? This is like a month, 2 months, 3 months, 6 months on the market, and so I would go talk to the sellers and say, look, I'll buy your property and I'll give you market price for it even.
Right.
And
okay.
they're like, oh my God, that's great. Like, we're not getting any bites from anyone else. Well, I would also then kind of line them up with the buyer who couldn't buy and say, look, you're going to go rent something for a couple of years anyways. Throw all your money away, waste it on rent in someone else's house that'll never be your house when you really want the place that's going to be yours.
Right.
And so they don't mind paying a little bit extra because, again, money out the window, right, on rent.
Right.
And so I would kind of match them up. And it's a way that you can make money in real estate without having any of your own credit, without having to buy places.
Sure.
Kind of arbitrage. So I would do some sandwich deals. I'd maybe give a seller like $1,000 a month every month, and I'd collect $1,500 a month from the buyer.
Sure.
I'm making $500 a month now on a property I don't technically own.
Right.
Didn't have to go buy, didn't have to go put a large chunk of money down, or maybe I put down a couple $1,000s to lock it up under contract, but now I got 10 or 15 or 20,000 from my buyer. Mm-hmm. So I started going, wow, this is pretty amazing, because what's the number one thing that you think holds people back from investing in real estate?
Oh, it's the down payment. Right.
I think they need a ton of money down.
They need a ton of money down. The income might not be there.
Yep.
They don't have any interest in a DSCR loan or anything like that.
Or they don't even know about it.
Or they even know about it.
Yeah, they think they have to have an 850 credit score and like $100,000 in the bank minimum, otherwise no one will touch them, right?
Right.
And so imagine if you had, a deal you could create, you could craft, that you only needed $1,000 down to make $500 a month in cash flow.
I mean, that's pretty slick.
$20,000 in the bank, you're doing 20 deals.
Yeah.
Versus the normal person thinking, I can't even do one. So it really started blowing my mind. I'm like, wow, the world that I learned and knew as a lender, right?
Mm-hmm.
I know all these rules and guidelines and boxes you got to fit into, but I'm like, this is like the Wild West.
Yeah.
And in a sense, there's, it can be bad because there's some bad characters out there.
Yeah, and I hope I'm not throwing you for a loop here, but I kind of want to talk about that because there's a lot of people that say, "Oh, contract for deed," like you were saying earlier on the internet. Oh, that's a scam. Like I want to stay away from that. But that's not necessarily true at all. You are actually helping people that need this program, and
Yeah.
it works out for everybody.
Yeah, absolutely.
It works out for everybody.
Yeah. Well, and honestly, I can't say everybody.
Sure.
All right. I can't say 100%. I mean, 100% of mortgages don't work out for people.
Yeah, that's true.
That's why there's
That's
foreclosures, unfortunately, right? 100% of renting doesn't work out for people. That's why there's evictions,
Yes.
right? But I would say giving people the chance is 100% there, and then it's up to them to do what they need to do to get kind of to the other side. So I like to kind of call creative financing as like a bridge. It's a bridge to
Right.
home ownership, right? And the beautiful thing is the terms are really whatever you negotiate.
Right. It's
Whatever
not
you
we're
negotiate.
not going to the secondary market and we're saying, oh, this is your rate.
Yeah.
You want to buy down points, what's your term? There's so many things that go into interest rate, as
Yep.
you know, but now it's really, well, how can you negotiate?
Yeah, yep, exactly. And so I think the really important thing, and I'm glad you brought this up because this is really important to me. I've been doing, these types of deals, for probably good, like very frequently, 10 years, 12 years, doing these types of deals, right? And 20 years in the real estate and mortgage space. But there's ways to set people up to win, and unfortunately, there's ways to set people up to fail. And I think that's
Yeah.
why regulation is important. I think that's why having an agent,
Yeah.
to represent you is important, or an attorney. Like some people, right? And this is the sign of a bad apple, right?
Right.
A bad character is they don't want anyone else involved, right? Let's sign on the back of the car or at McDonald's or something weird, right?
Yeah.
Like I want all of our clients to be represented either by their own agent, their own broker they find, or the one that referred them to us, or if they
Right.
find us direct. We do a lot of marketing and advertising, so maybe they find us direct, but it's still somebody that's within our brokerage that is representing them.
Right.
And they have every option to look at all of the facts. We want them talking with the mortgage lender
Yes.
to say, look, you're kind of in this black hole right now for a year or 2 or 3.
Right. And
But can
so
you get out of it?
Right, and so I think that's important too, is that contract for deed and doing this creative stuff, it's not necessarily a long-term solution. I'm sure there's a couple out there where it would be a long-term mutually beneficial relationship for both parties involved.
Yeah.
But by and large, most of them are ending with you trying to get your own mortgage.
Yeah, and again, it's how they're designed, right? It's how they're designed. It's like a contract. You could have a completely one-sided contract.
Right.
One person is totally winning, the other person is totally losing, and obviously that's not cool, fair, ethical, moral, right?
Right.
It's no bueno. But it can be designed that way, right? It's contracts. So same with any sort of a deal or transaction. So for us, we want to, number one, always, first and foremost, make sure they can afford the payments, no problem.
So you do your own underwriting.
We do, yeah.
Okay.
We do our own underwriting, and we use licensed originators also on our
Okay.
team to do it. So it's almost like a double vetting of
A double
underwriting.
vetting. So
Yeah.
I think that's really important. That's also a red flag, right?
Yeah.
If someone's not doing that,
Yeah,
and they're just giving this you, I'll say it. As a traditional mortgage originator,
yeah,
you want to make sure that you can be able to afford this,
yes,
right? Now, there are regulations out there that they're assuming you haven't had a divorce and your credit hasn't been shot. They're assuming you haven't had a bankruptcy. This is a great way. And are those primarily the folks that you help out? People with divorces, self-employment, or bankruptcies? Are those your primary clients, or are there any other type of folks that you help out as well?
So that's a great question you bring up. There's a lot of times people have a really big misconception with contract for deed or even rent to own, right?
Right.
Again, it sounds scammy or sounds fishy, or it's like, hey, is this for people with a 400 credit score and want $1,000 a month rent and have no money? And yes, those people are out there. And trust me, I don't want to help everyone we can with homeownership.
100%.
Everyone deserves a shot at homeownership, right? And we want to help everyone we can. But there's also risk, and there's reasons that there is underwriting and guidelines. And
Right.
some people honestly aren't meant for homeownership maybe right now, right?
Right.
It's not for everybody, too. So, but there is this kind of big misconception that that's the kind of people that do this, and they're almost embarrassed to say, "Oh, I did a rent to own, or I did a contract for deed," right?
Right. But it's
Totally different.
totally different.
It's totally different. We have a situation as we speak right now. We're closing in a couple weeks.
Okay.
person makes $20,000 to $30,000 per month.
Okay, so that's a good income.
Yeah, they've got a 6, I think, 30 or 40 credit score.
Okay.
And the only reason it's in the 6s and not in the 7s is they missed a couple payments. And it was something where they thought like auto pay was set up and it wasn't, or they weren't getting the bill. Something silly, right? Everything else been paid on time like clockwork. They make a great income, right? More than most people. And they're putting almost $90,000 down on a property, on a $700,000+ home.
Wow.
Okay, that's not the person who can barely scrape together a couple $1,000s with a 500 credit score.
Right.
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 I helped a gentleman get into a place last fall, $1 million property, almost 7,000 square feet. Him and his extended family, they needed a lot of space for everybody, and he's self-employed.
Right.
Self-employed. On paper, grosses a lot, but writes off a lot. Right.
Right.
Now, I'm not the IRS, I'm not a tax professional, I'm not giving tax advice or legal advice, of course, ever.
No.
But, right, I'm like, how you do that is up to you. But when you're getting told no by the banks, and we can look at it and say, we know you can afford this because there's other ways of reviewing things, right? We know you can afford these payments, we can look at other metrics. And, and this person put, over $200,000 down on a property.
Right.
Right? So think about the average landlord. The average landlord is collecting 1 month's security deposit.
Right.
Ooh, right? And they have a tenant who's living in that property who doesn't really think of it like their home, right? It'll never be their home.
Right.
They don't necessarily think like an owner, and I don't say that to be mean or negative. We've all been there. We've all rented.
Yeah, we've all rented.
But when you're renting someone else's house, it's not your house. You don't have to fix everything. You have to repair it. You just call the landlord.
Yeah.
And so when someone does have to fix and repair those items, and they put down $20,000, $40,000, $60,000, $100,000 down, and it's going to be their home, they act differently. And those are the people we really, as our ideal client, right? Someone who says, it was just a little hiccup. They had a little road bump or a speed bump, right?
Right.
And sometimes I call it like the black hole. Right.
Right.
There's some rule or guideline, and they need 12 more months, 24 months, maybe 36 months,
Right.
and then they're good to go again, right? Now, if they can't make payments because they're unemployed,
Right.
or they're, God forbid, hospitalized and not working, or something horrible like that.
Something horrible like that. Yeah.
I mean, then we'd be absolutely setting them up to fail, right? We don't want their money. We don't want the house back. What we want is them to go full circle, pay us off as soon as they can, and come to you, get a mortgage, and say, great, hey, I'm paying off this 9%, now I'm getting a 7%, or I'm paying off, this 6 and getting a 4, whatever the heck rates are when they do it, right?
Yeah.
And you saying, I'm glad you got the house when you did.
Absolutely.
Because someone else would have got that house.
Somebody else would have got the house, and I think that's something that I'm really trying to preach to folks right now.
Yeah.
And it's this. With this, you can negotiate your rates, your terms, everything like that. When we have our rates, and we can do some creative things to help with that. But right now, we've been brought up since 2008. Our parents, what have they always said? Get the best interest rate.
Yeah.
Don't pay extra.
Yeah.
Don't pay extra.
Yeah.
And that's wise advice, right?
Yep.
But in today's market, and I'm going to go ahead and say for the foreseeable future here, I'm talking next 10 to 20 years, it's not going to necessarily be the interest rate. It's going to be getting the actual house. That is huge.
I agree with you. And you can always refinance down the road. I should say always. Of course, if you
There's
qualify
always extenuating circumstances.
Yeah, but there's always a very likely chance of going and refinancing if rates go down.
Yeah.
But that house, especially like for this one gentleman and his family, I mean, he needed a big home.
Right.
They have an extended family, and they had other people living there. They needed space, and this was like the one for them. Well, he absolutely wouldn't have got that house if it wasn't for us in our program. And on top of that, just the fact he wouldn't have got the house without us, he would have probably spent a very good amount of money on rent somewhere else.
Oh my goodness! Well, yeah, and at that point, you are right for a big family. I mean,
$4,000 or $5,000 a month.
Yeah, $3,000, $4,000, or $5,000 a month.
$48,000 to $60,000 a year, and then multiply that times 2. Now you're $50,000 to $120,000
That's
out the freaking window without nothing to show for it.
Nobody wants to do that.
No, nobody wants to.
Nobody.
So they don't think they have other options, right? They think it's the banks or that's it. And we can come in and say, hey, look, we can give you another option you probably don't know about, and it's a win-win-win. You get the home. The nice thing is agents love to work with us because they still get paid.
Yep, that's
they get
huge.
a full commission on a deal they would have made zero,
Zero.
right? And sometimes, heck, like right now, we're actually running a promotion. We're paying an additional $2,000 on top of a full commission,
Very cool.
right?
Very cool.
Yeah. So I mean, we want to help as many agents and lenders do as many deals as possible, while helping as many of their clients in the community as possible
Well,
at the
and
same
it's
time.
and it's helping people. I mean, really, it does come back down to that, because you're not just giving anybody money to go and buy this home, right?
Correct.
You're not just giving that to anybody. You're being responsible about it, and you're making it possible for people. I mean, let's say they did have a bankruptcy, and now we do have the $60,000. I mean, you just saved them $60,000, and you're talking about a 1 to 3 year loan program.
Typically, yep.
Typically, yeah.
1
so
to 3 is kind of the
sweet
range.
spot.
But again, that's the nice thing is, my company's Home Solutions Group. Okay, solutions. So
Right.
it's not only 1 year, only 3 year, only 5 year. I mean, we've had deals we've done for 25, 30 years.
Oh,
If
cool.
somebody doesn't want to come talk to you, which they're crazy, and get a lower interest rate, and they just want to pay, our company or our team or one of our investor partners for the rest of their life because they like them, and it sounds silly, but we've heard that before.
Sure.
We like you. We feel comfortable with you. We just want to deal with you.
Right.
I mean, let's be honest. Sometimes the underwriting process is not fun.
Sometimes.
All the paperwork and the rules and this and that, right?
Absolutely.
Some people just want easy. Some
Some
people
people
just
do.
want simple.
Yeah.
So we craft solutions that honestly, we try to meet everyone's needs. It has to be fair, of course, for everybody, for all parties. We understand risk is involved. I tell our buyers, hey, we're letting you pick out a house to go buy when the bank won't touch you. So,
Right.
that's why we do need some skin in the game, and we might,
And so
ask some more questions.
And so when you go out and buy the house, are you buying that in cash then, or is it still a financing offer?
We do both. Yep.
Okay.
So we buy in cash or we buy in financing. Kind of depends on the situation,
Okay.
location, market. So
Right.
we do this in Minnesota, but outside of Minnesota as well. So.
Right.
Yeah.
Right. Well, I think I was talking to you about a guy in Ohio.
Yeah, exactly. Yes.
So you guys can work everywhere, and I know you've been down in Florida as well,
Yeah. Yep.
helping
Yeah,
out
we've
down
done a
there.
bunch in Florida, a bunch in Wisconsin. So one thing that kind of was fun is I love to share like education and knowledge with people, and especially just different ways to do things, right?
Right.
Like I'm not the cookie cutter kind of person, right? I do all the weird stuff. People are like, oh, you're a realtor. I'm like, I'm not really a realtor.
Right.
I am. I'm definitely a
are.
licensed realtor, professional licensed
But-
realtor. But my desire is not to go show houses nights and weekends,
Right.
and run around and doing that. And I'm, you want the best listing agent in town? I'm not your guy, and that's
Sure.
okay, right? I'm the kind of guy that right now is closing tomorrow on a vacation rental with $30,000 down instead of $55,000 down,
Which is
getting a 5.5% interest rate from the seller instead of a 7.6 from the bank,
Right. Or
with
even
an
higher.
18-month term, and going to come back in 18 months and go to the bank, and I've already created and built my equity, proving my cash flow, and taking my lump of money and trying to get it to go a lot further, right? That's where I'm your guy in that stuff.
Right. Well, Jesse, this has been awesome. We are coming up on our time here now, but I just wanted to thank you so much for coming over. What's the best way to get a hold of you for asking questions? Maybe somebody has, I have kind of an interesting deal. I would like to talk it through with you. What's the best way for them to get a hold of you?
Yeah, so you can find me on pretty much all the socials.
Okay.
At the Jesse Mills. So
Okay.
THE Jesse Mills, the Jesse Mills on Insta, on Facebook, and TikTok. But I'd say otherwise, I'd be happy to talk to someone and schedule a call. Whether you're looking to get into investing, whether you're an agent or a lender looking to do more deals, help more clients, or you're a buyer looking to get into your own home and you don't think financing is an option right now. Any of those is something I'd love to sit and chat with anyone. And the website to book a call with me is calljesse.net.
Calljesse.net, and we can
Yep.
put that up here on our end slide.
Perfect.
Jesse, thank you so much. It's been a pleasure.
for
Guys,
having me.
thank you for tuning in. Please like and subscribe. Share this with your friends. We're giving you some great knowledge here. We will see you next time. Until then, take care, everybody.
Thanks for having me. Appreciate it.
Thanks for being here, man.
Thanks.